Hey, what's going on, everybody? I'm back once again with a stock market update. So we are looking at the E-mini Dow Jones futures. So this is the Dow. So here's where we are now, and we have a 5-wave pattern, and that is a very bullish sign. If you didn't check out the previous video, go ahead and check that out for the background of how we got here. But this looks like a pretty clear 1, 2, 3, 4, and 5. And so with that being pretty much done, or it looks like it's done, now this should be the new low. If I'm right about this being a 5-wave structure, this should be our new low. So we'll probably have a correction, something like this. Not sure exactly how low it will go. Guessing somewhere maybe around this range or this range. Should be a deep correction since it's a wave 2, or at least a sub wave 2. And we'll turn around and keep going up. So this is just a rough sketch here of what I think it may look like. So this is a pretty simple update. I'm guessing that it may go to roughly to this area, because this would be a 1-to-1 match of the length of this wave. That's what I'm measuring with this tool here, going to the bottom of this wave 3, where this is the end of wave 2 and the beginning of wave 3. So starting right at the bottom, and this is the distance of wave 1. So sometimes at least 2 waves in the Elliott wave theory, they have the same length, and one wave will have a different length. So but there's a lot of different ways this could play out. It could go even further than this. It could be an extension, lots of different options or scenarios. So this area, we'll just have to watch this as it plays out. But in general, I think we're moving on up, and then we'll have a correction after this finishes for wave 4. Since this wave 2 was very shallow, the wave 4 correction will probably be a very deep correction. And with this being a 1-to-1 extension of not an extension, but a 1-to-1, I forgot what it's called. With this being the same length as wave 1, we can see, if we look over here, that it's going right to this area, which is the all-time high. And so once we reach that area, this will be a very big this is a very big area of resistance. So I wouldn't be surprised about having this very big dip here. So those are just some things to watch out for. And once the dip here is done, moving on up to the target area, starting at 35,000, we could go as high as 45 or even 50. We'll just have to watch all of this as it plays out. This is just a general idea of where I think we are going. So let's take a look at the S&P 500. I will probably be spending more time with the S&P 500 going into the future, because the Dow used to be the main index years ago, but now the S&P 500 is the main index. This is something I wanted to show. So when we look at the S&P 500, the futures for it, I measured the time. This tool right here is this one. Nope. This one, trend-based fib time. So that is the trend-based Fibonacci time. So this is using the Fibonacci numbers to measure the time comparison to wave one. So if I click on this, you can see there's a point here and a point there. That's measuring how much time it took for wave one to happen. And it projects that into the future to see how the correction in wave two compares to the time for wave one. So I didn't want to think that this correction would be done so quickly, so shallow, but a rule of thumb that I go by is that this 382 is the minimum time it can take for correction. So once wave one is done and I'm watching it play out, anything that happens here, I assume that it's not the ending of the correction, because the waves have to have or they tend to have um, a relationship in the time frame as well as the price range. So as much as I didn't want to say that this was over, it turned around right at the 382. So hey, that is the end of wave two, and we got wave three starting here. So if you want to get in on a trade with this, here's a few different things you can trade. We have the SPYD, which is a high dividend S&P 500 ETF, or you can use this SPY. This is the one that what's his name from Shark Tank, Mark Cuban is buying into this one. That's what he said. Then this one is another S&P 500 ETF, and we have the IVV. So all three of these are ETFs for the S&P 500, and this is a high dividend version of the ETF. So if we look at one of those ETFs, let's take a quick look. So based on the analysis of the S&P 500, here is my wave one, here's my wave two, and you can look and see that the pattern is very similar to the S&P 500 because they're basically the same thing. I think the margin of error is less than 0.1%. This tries to be as close to exactly the same as the S&P 500 as they can make it. So this is my sub wave one for this wave three. If you want to buy into this, you can start buying here with a market order and just ladder your way in by placing orders like here, for example, and here, and here, and just keep on spreading them out. So as the price corrects, you can just get an average of this range, with your stop loss being here below wave two. And another way you can do it is also you can buy, for example, you can buy a little bit every week. So you might buy 25% this week when the market opens on Monday. You might buy 25% next Monday, and you might buy 25% and spread it out over the next 4 weeks. Because I think the market is about to take off like big time. So I would be putting my orders going in really heavy during this period of time. So I've got a lot more content coming, a lot more. One of those videos will be the doom scenario that I've been talking about. I've been seeing a lot of people talking about this, and I think they're talking about it way too soon. will there be another crash? And I don't want to go too much in detail yet, but that video is coming soon. So if you don't want to miss that video, and if you want to see the other content I got coming, make sure you subscribe to the channel, and turn on the notifications. And that's about it for this video. I'll see y'all in the next one.